All right, so welcome again. We are Future Now Technologies, and this is our seminar, Blockchain and Bitcoin Introduction. So what we are going to discuss today is actually what is a Bitcoin. There has been a lot of hype and a lot of discussion about Bitcoin itself, but actually what is a Bitcoin? That's going to lead us to the question, what is a blockchain? From there, we'll discuss how did we get there? How did we arrive at this world where we were learning about blockchains and Bitcoins and the rest? Further, where are we now and where are we going? And lastly, how can I invest? I do believe by the end of this discussion, you'll be very interested in, how can I get my hands on some of these cryptocurrencies, blockchains, Bitcoins, and the rest? So a little bit more in detail about the plan for today. I'll do a quick introduction about who I am and how I wound up here. We'll talk a little bit about what brings you in today, the hype, where we are now, what is a Bitcoin again, what is a blockchain, what are we going to use them for? So that's really the $100 million question. What are blockchains good for? Should I get involved in cryptocurrencies? How to do it, and then how to hang on to them. And a quick vision for the future. So it's going to be a fun-filled evening here, and I'm looking forward to sharing this information quickly with you. A quick disclaimer, the views expressed are mine and mine alone. They do not represent the views of any current or former employer or client, and these are for educational purposes only. These should not be used to make investment decisions. I am not an investment advisor. You should contact an investment advisor before making investment decisions. Cryptocurrencies are in fact highly volatile and involve the risk of loss, including lost principal. First, before you think to invest in anything, you have to know what the investment is. So we are here to learn about what the investment is in digital assets and cryptocurrencies. A little bit about myself. I'm a graduate of the University of Oregon's Charles H. Lundquist College of Business and the Ansted Accounting Complex. I did, in fact, major in accountancy. I minored in finance. In 2015, I had the opportunity to travel to Beijing, China on a consulting engagement. That was a very exciting experience as I got to understand a culture from a different perspective. Our project discussed examining an entry strategy for a Chinese firm into the European Union market. That was the first opportunity I had to look at the entire globe as a marketplace. And that was a very eye-opening experience. And it allowed me different ways of looking at data. I then traveled to Washington, D.C., and I met with members of the House of Representatives. I traveled with the AIPAC conference, the American Israeli Political Action Conference, which is the largest lobbying organization in the world. And that was also an eye-opening experience. And I learned a lot about how our government works and how things happen in practice. And that was very informative and taught me a great deal about the course of my career. After graduating from college, I became an accountant in public practice rather. And I worked with DiLorenzo & Co., which is where I cut my teeth, is what they say. I learned the ropes. At Gregory Sharer & Stewart, I continued my education. And then at RSM US LLP, I continued doing taxation. And I look here forward shortly to acquiring my CPA license. I also a Blockchain Council certified cryptocurrency expert and a Blockchain Council certified smart contract developer. Cliff High. Cliff High is an old man these days. He is in a bout with cancer, and he has shared that publicly. So Cliff High was a computer programmer, and he was working on high-level computer programming in the 80s. He created a software called Predictive Linguistics that guided him towards blockchain and Bitcoin, and he spoke about it in 2014. It was later in 2014 that I began to explore it seriously, but I thought originally, funny money. I was an accountant at the University of Oregon at that time, and money, I thought I knew what money meant and what it was. It was later in 2014 I made the worst decision ever to turn down a person paying me 50 Bitcoin. They said, I will pay you for the work that you have done, Mr. Spencer, and I will pay you 50 Bitcoin. And I said, no, cash sounds good. And they gave me $50 in cash instead of 50 Bitcoin. And as a result, I'm very sad about it today. And I have been chasing my 50 Bitcoin experience ever since. And so I earned some freedom to learn about blockchain while I was in my career. And I watched blockchain in 2017 go to nearly $20,000. And that was when I really realized that the digital assets that we experience are going to continue to grow and going to continue to be a huge part of our financial world. So I know what brings most of us in here today, so we'll go by this one quickly. Thank you, Lynn, for joining us. I do believe you'll find the information valuable, and I do believe that we'll come across this here during tax season. I suspect that we will see maybe 1 or 2 tax returns for people who have cryptocurrencies and digital assets. We'll have to check the box on Schedule 1 that tells us that they do, in fact, have digital assets. What is the internet? So let's look at this real fast. Let me cue this up for you here real quick. Hello, Brandon. Thank you for joining us. Let me cue this up for you here. So this is a Today Show clip from 1994 when they were discussing what is the internet.
Back now, 56 past, I wasn't prepared to translate that because I was doing that little tease.
Oh, that's
that little
right.
mark with the A and then the ring around it.
At.
See, that's what I said. Katie said she thought it was about.
Yeah. Oh.
But I'd never heard it.
Around.
I'd never heard it said. I'd always
That's
seen
right.
the mark, but never heard it said. And then it sounded stupid when I said it. Violence at NBC.
What heard you around or about
in the lunchroom the other
See,
week.
there it is. Violence at NBC. GE com. I mean,
Well, Allison should know.
what
do you
is
say about
internet
Allison?
anyway?
Internet is that
Massive computer
right,
network.
the one that's becoming really big now.
What do you mean? That's big. How does one? What do you write to it like mail?
No, a lot of people use it and communicate with. I guess they can communicate with NBC writers and producers. Allison, can you explain what internet is?
No, she can't say anything in 10 seconds or less.
Oh, Allison will be in the studio shortly.
What is
What
it?
does it mean?
It's a giant computer network made up of started from.
Oh, I thought you were going to tell us what this was.
It's like
You've been
a
looking in the
computer
dictionary.
billboard.
It's not an. It's a computer billboard, but it's
Right.
nationwide, and it's several universities and everything all joined together.
Right.
And others can access it.
Right.
And it's getting bigger and bigger.
It
Just
came
great.
in really handy during the quake. A lot of people, that's how they were communicating out to tell family and loved ones they were okay because all the phone lines were down.
I was telling Katie and I
But you don't need that. You don't need a phone line to operate internet.
No.
So I show that to share with you the idea that we have been here before. So the idea that, today we use the internet so effortlessly. I mean, we open our phone and we just use the internet, right? One day we will use blockchains in a similar fashion. And it's okay to say, well, I'm not sure what that is now. Let me find out, all right? So you are investing in your education today and it will pay off in the future. And the future is where we're going to exist at. We think about today, we think about tomorrow, but the fact of the matter is that we really have to think about 5 years from now, because the decisions that we make today are going to give us the ability to make decisions in the future, right? So it was only because I decided to move to Florida that I had the option to meet my very beautiful wife. So the future is where we will exist at. So where are we now? Bitcoin, we might think of it as this very esoteric thing. However, in the financial services industry, it's not so far-fetched. There are numerous financial services firms in which you can purchase Bitcoin in your IRA account. There are numerous banks, which are able to hold for private clients digital assets. If you have your digital assets on a hardware wallet, which we will discuss later, you can store them in a safe deposit box, which could be a tricky thing one way or the other, which we'll touch on when we get to that section. But while digital assets may not quite be mainstream yet, in financial services, it is quite the hubbub. There are, in fact, over 1,600 cryptocurrencies traded on over 190 exchanges worldwide. Depending on who you ask, there could be over 3,000. That number can vary because is it a cryptocurrency? Is it a token? The definitions are still blurry. I think we're still waiting on regulators to give us some clear guidance on exactly what it means to be a cryptocurrency, a digital asset, and the different classifications that come with that. Another interesting development is central bank digital assets. So central bank digital currencies, the first, I believe, was the crypto ruble. Probably a year and a half ago, the Russian government decided they were going to test a pilot project known as the crypto ruble. It has semi-floundered, it's in beta testing, and they've taken it back into the lab. China has launched their secondary level testing of their digital currency called the digital yuan, and it's in small testing in a city of 4 million people in China. In China, a city of 4 million people is in fact a small city. And they're having a much more success than Russia did. The United States has a project known as the Digital Dollar Project, headed by the former chief of the Federal Trade Commission. That project is designed to help the United States establish its digital central bank digital currency. How those will operate is still in flux. There are numerous different models that are still under consideration by the different countries, and we'll see how it kind of plays out. Some people want to use Bitcoin as their digital currency, but there's other complications with that, which we'll discuss later. So what is a Bitcoin and where did it come from? So a Bitcoin is a digital representation of currency. That sounds pretty simple. We'll talk about what the problems are that will arise with that. Where did it come from? This is an abstract from the Bitcoin white paper. A white paper is a document designed to explain a complex topic. Oftentimes they can become more complicated than is necessary, but we'll get there. So originally, the creator of Bitcoin was Satoshi Nakamoto. Satoshi Nakamoto is not a real person, at least not anyone who has identified themselves. It may be a group of people, it may be one person. No one knows who created Bitcoin. And for people who are heavily involved in the Bitcoin community, it's kind of a running joke. They'll say, who are you? If you claim to know too much, they will say to you, who are you, Satoshi? And then you say, of course I'm Satoshi. Because no one knows who it is. And it is, in fact, an interesting point that the technology that has been so influential in our world here today, no one knows who actually created it. That's an interesting point. The Bitcoin pizza. The Bitcoin pizza was a pizza that someone purchased for 10,000 Bitcoin. To date, that is the most expensive pizza on record. So the pizza man came to the door, and the person who was buying the pizza said, instead of paying you the cash, I will pay you in Bitcoin. They accepted the purchase in Bitcoin, 10,000 Bitcoin, and the driver paid for the pizza out of his own pocket. That is the most expensive pizza that I've ever heard of. So 10,000 Bitcoin, we got our trusty calculator here. Your friend, the accountant's got his calculator on the ready. So 10,000 Bitcoin today at the current Bitcoin price. Let me check coin market cap here. Today, right now, one Bitcoin is $10,432. That pizza cost $104 million. Oh man. So that's the story of the Bitcoin pizza. Now, Bitcoin was the first mover in the cryptocurrency industry. However, there are some pros and cons to Bitcoin. The pros to Bitcoin are that it is an entirely public network. Nobody, no government, nobody can shut down Bitcoin. Your government could tell you that Bitcoin is illegal, and if they catch you with it, that they will take you to jail, but they cannot stop the Bitcoin network, period. There's not any way you can unplug it. You can't kill all the miners. As long as it's running on maybe a handful of laptops in the world, the Bitcoin network will continue to exist. So that's a very, very powerful thing that, you know, people like about it. One of the things about the Bitcoin network, though, that's a con, is it is slow. A Bitcoin transaction, in practice, a Bitcoin transaction can take several hours. In theory, Bitcoin transactions happen every 10 minutes. Every 10 minutes, a block is loaded onto the chain, and that creates the next link in the blockchain. And the Bitcoin blockchain will then add another link with another set of transactions in another 10 minutes. In the world that we live in, that's too slow. And to give you a comparison, the Visa network transacts over 500,000 transactions per second. So 10 minutes to get a handful of transactions completed does not move at the pace of modern finance. So that's the reason why long-term Bitcoin is not the answer. Bitcoin will either go to $100,000, $1 million, and it will be the coin of the millionaires, or it will go to zero. At the moment, no one knows. Too hard to tell. So those are the options for Bitcoin. However, the concept of buying Bitcoin, using Bitcoin to purchase a cup of coffee, you'd be standing at the register for 10 minutes to make sure that your transaction was validated. And that's not realistic in the world that we live in. However, there is competition. Ethereum, Ripple, Hedera, CBDCs. There's a number of different people who are, in fact, hoping to use blockchains to manage your cup of coffee transaction. And that is where the future is taking us. So we're looking here at the Bitcoin white paper. Let's talk a little bit more about a white paper. A white paper is an authoritative report, guide, that is designed to inform you concisely about a complex issue, all right? And it presents the philosophy on the matter and is help to allow you to kind of wrap your head around the whole idea, okay? And if you come across a cryptocurrency that does not have a white paper, if they're right, go left. If they're left, go right. If there's no white paper, don't interact with them, all right? The difficult thing about white papers is that they're written by coders. They're often necessarily technical. So often they can be more technical than a lot of people can follow. I'll give you an example. This is from the Bitcoin white paper. If you're an accountant, a mathematician, Lynn, maybe you understand this and have a good idea about what's going on here. But if you're not watching that every day, then that might not be something that you're familiar with. And so this down here is probably some form of Solidity code. And we've got some summation formulas here. But maybe this is not your language. So maybe reading a white paper is just going to confuse you even more. I'm sorry?
So statistical.
Yes, indeed. Yes, indeed. You
It's
don't.
statistics.
Yes, indeed. If you
Yep.
don't speak statistics, maybe it's not your language. So for some people, a white paper can be more confusing than when they started. That's why it's helpful to have somebody around who can read a white paper for you. So can we trust them? They put all this all this jargon out here. Maybe I don't understand what's happening. Who's watching these people? That's a very good question, because nobody knows at the moment. At the moment, one of the biggest hurdles in the cryptocurrency industry is regulatory clarity. And regulatory clarity refers to understanding, who do I report to? As an accountant, I understand that I need to report to the Board of Accountancy. And if the Board of Accountancy says that I need to do XYZ, then I better pretty quickly do XYZ. But if a cryptocurrency company is operating, who's regulating them? That is going to largely depend on what type of token there is. I mentioned earlier that there could be up to 1,600 cryptocurrencies, or maybe there's 3,000, depending on the classification. Some of the classifications could be a digital currency: Bitcoin, Libra, perhaps, maybe it'll come back, Ethereum, maybe those are digital currencies. Maybe there are security tokens. The security tokens might represent ownership in a firm, in an ongoing enterprise. Maybe it's a commodity token. Maybe it represents ownership in an asset stored in a warehouse. A utility token may allow you access to a network. If I'm a developer, then maybe I need a utility token to access your development platform. Network tokens could be important in gaming. You know, people underestimate the value of the gaming industry. However, that's a $50 billion industry. So the use cases in cryptocurrencies, the use cases in the gaming industry for cryptocurrencies could be huge, and could be a huge value to the industry. So the regulation of cryptocurrencies is going to depend largely on the classification of the digital asset itself. And how do you tell what the digital asset is designed to do? Read the white paper. And so we're gonna read the white paper, or know somebody who can inform you on the topic. Again, maybe there's 1,600, maybe there's 3,000. Some are very innocuous. They're used in RPG style games and are purchased for in-game purchases. How dramatic their change remains to be seen. And we will talk about some dramatic effects that cryptocurrencies have had in the marketplace and on some people's lives. So what is a blockchain? So we've talked about what a Bitcoin is. A Bitcoin is a digital representation of value. And that value, that digital representation, is transferred across a blockchain. A blockchain can be analogized to the internet. So Facebook operates on the internet. Bitcoin operates on a blockchain, on an individual blockchain. A blockchain can be created, in 15 minutes. The robustness of that blockchain may take more time, okay? You can create a blockchain if you have 2 nodes, perhaps. So that would be 2 computers running the same software. Maybe a computer on this side of the room and a computer on the other side of the room. And I can issue a digital asset, and that digital asset will be worth whatever I say it is until I ask someone to purchase it. Because the thing you can always remember about business is that something is only as valuable as someone else will pay for it. Whatever the price of it is what someone else will pay for it. Not what you think it is, not what I think it is, what someone else will pay for it. So a blockchain is a type of software that solves a particular problem. And it consists of a ledger. The technical name for a blockchain is a distributed ledger. Our current model of security is centered around, let me create a vault. Let me make a box of information that no one can get into. People try to hack my vault of information, and they cannot hack my vault of information because I have a powerful vault around it. That's our current model of security. A distributed model of security says, I'm going to put all of this information out there, and I'm going to get a team of nodes, a group of people, and we're going to watch it all the time. 24/7, somebody's watching. If you want to transact on it, somebody's watching. If you do anything on the blockchain, there's a node watching and validating the transaction. That's another model of security. And so the blockchain turns the security model on its head. And that's what keeps it secure, that every one of the nodes is validating the transaction before it occurs. John wants to sell some widgets to Mary. The node is validating that Mary's got money and John's got widgets. And yes, they have been uploaded and verified on the blockchain. This is a valid transaction. That is the work in the proof of work, validating those transactions. And you can think of a block. You can think of a block as a unit of data, and that data contains information concerning the transfer of widgets and dollars between Mary and Bob. So on the record, when if there's ever a dispute, we can go back and say, right here, there were widgets transferred between Mary and Bob. And because it's linked to the next transaction, if you ever try to make a change to this individual, and you've got to change all the ones that happened afterwards. And so it's computationally impossible. And so what makes the blockchain special is how the information is verified. So as an accountant, one of the services that I'm able to provide is auditing. So an audit is necessary because a firm goes through the year and they make all these transactions and they do this and they do that, and their accountant books this and books that. And at the end of the year, the bank wants to make sure that the financial statements that the person they loaned $100 million to are accurate. So I want to make sure that the books make sense. That's what an audit is designed to do, to ensure that the financial statements are fairly represented in all materials respects in accordance with the applicable financial reporting framework. And blockchain kind of, again, turns that on its head. What it does is, before the transaction can ever be put into the books of the organization, it is verified. Is this transaction accurate? And is this transaction valid before we put it on the books? And in theory, that will eliminate the necessity for audits. I'm skeptical of that myself because now they have software audits. So I don't think it's going to eliminate auditing as we know it. I think it's going to change how it's done. So because the transactions are validated prior to being put on the blockchain, that's where the security layer happens, as opposed to validating the entries at the end of the year. The second part of what makes blockchains unique is that the way the information is stored. And I mentioned earlier that transactions are linked together. They are cryptographically linked together such that in any changes to the current block, any changes to any previously recorded information must require the update of all the information that follows. So that's why one of the things you will see when you talk about, as you transact in cryptocurrencies, is the number of confirmations. It is the number of confirmations from various nodes on the network. And those confirmations are kind of like how many additional links are after yours. That's an easy way to look at it. And those confirmations say that this transaction has been linked to others, and to change this one now, you've got to change all of these afterwards. And that is increased security on that particular transaction. So we've been talking about blockchains kind of in the aggregate. And that's not really how technology develops. Blockchain as a technology, distributed ledger technology, was introduced by Satoshi Nakamoto in the Bitcoin white paper in 2009. Since then, there have been numerous iterations and numerous advancements to the original development of blockchain technology. Blockchain technology was designed to solve a relatively simple problem called the double spend problem. And the easiest way to think about that is this. If I am sending an email and I attach a document, when I send the email, I have not sent the actual document, I've sent you a copy because I can still go back into my computer and open up the original document, right? That is okay if I'm sending you a flyer for an event. However, if I'm sending you money, it needs to be sure that I can't both send you the money and now you have it, and I still have it too, right? So, because then I haven't sent you money and now I can just send money all over the place and I still got it in my pocket. So that is called the double spend problem, right? That is known as the double spend problem. And the double spend problem is what is solved by the introduction of blockchains and distributed ledger technology, because it creates a permanent record that you no longer have it, that you sent it to Mary and she sent you some widgets as in return. And so since the beginning of the original blockchain, remember I talked about the problems with Bitcoin's network. It's slow, it takes 10 minutes to do a transaction. Pretty quickly, people understood that that was not going to work for the modern financial world. As a result, there have been competitors. Ethereum. Ethereum was based on very similar technology to Bitcoin in that it was based on a proof of work protocol. And the proof of work protocol is based on hashing technology. We'll touch on that in a moment. It's very technical. If you'd like a more in-depth understanding of that, please let me know. And the proof of work protocol, Ethereum, which was the second digital asset ever invented, it was created to house smart contracts. And smart contracts are the execution of items. So we were talking about a transaction between Bob and Mary consisting of widgets and dollars. The smart contract is the portion of the code that actually makes that happen, that says, okay, once this transaction has been validated, we can in fact make the actual transaction occur. And they work in much the same way as traditional contracts. Once the necessary terms have been agreed to and the states have been arrived at, the transaction can commence. And we've already gone through numerous iterations of the blockchain. Bitcoin being blockchain 1.0, Ethereum being blockchain 2.0 with the addition of smart contracts, XRP, Federated Byzantine Agreement, Hashgraph, which is the Hashgraph protocol, which is their own unique voting protocol. Cardano has another development network. We have DeFi, which is short for decentralized finance, which is another way that digital assets are being used to fund enterprise and transactions cross-border. Then there are liquidity pools. And liquidity pools give investors the ability to earn interest on their digital asset investments. There are numerous different types of blockchains. There are permission and permissionless. For example, the Bitcoin blockchain is a permissionless network. If you so desire, you can use a computer and begin to operate a node on the Bitcoin network. It's quite a technical undertaking, and you will need numerous, probably GPU units. You're going to begin competing with organizations that have very, very high computing capacity, but you can monitor and see what's happening on the Bitcoin node at all times. Organizations that are in fact doing this are the Securities Exchange Commission here in the United States, the New York Stock Exchange, the CFTC, the Federal Reserve, the Federal Deposit Insurance Corporation. So numerous of these organizations have began to develop nodes on different blockchains so that they can monitor information and transactions on the blockchain. And they plan on using that for a number of different purposes. A permissionless blockchain would be one that is in use by an organization like Walmart. Walmart is using permissionless, its private blockchain, to handle its logistics supply chain. So trucking companies that contract with Walmart, they have RFID readers on the back of their truck. So when a package comes in, that package is scanned through the RFID and it is then in the tracking system. And that huge amount of data is managed by Walmart's permission blockchain. Permission blockchains can be distributed or they can be centralized. You can have, for example, there are a number of international banks that have a private permissioned blockchain, but it is a distributed blockchain because it's distributed amongst a number of authorized parties. Those authorized parties in this particular case are money center banks. A permissionless blockchain, you could, in theory, have a centralized permissionless blockchain, but that kind of defeats the purpose of being permissionless, right? So there's that. Again, there are a number of different types of blockchains. Blockchain 1.0, proof of work, based on hashing. Blockchain 2.0, proof of work, also based on hashing, but with the addition of smart contracts, which allows transactions to be executed automatically upon the realization of certain states of change. Ripple, blockchain 3.0, federated Byzantine agreement. Hyperledger, the Hyperledger fabric is based on another type of voting protocol. The Hashgraph protocol is another type of voting protocol, and there are enough to fill up this slide 3 or 4 times. That is to let you know that the pace at which blockchain and distributed ledger technology is changing is rapid. I am in this space every day, and the pace at which projects come and go are mind-boggling. And I'm going to share some of that information with you in the later part of our discussion here. So we've got kind of an idea, but we've talked about Bob and Mary exchanging widgets, and let's look at it a little bit more closely to understand what's going on in real life. So a transaction is requested. Bob has widgets, Mary has dollars. They want to make a transaction. That transaction could be absolutely anything you can think of. All right, we're using widgets. That block, a block that represents that transaction, is created every 10 minutes. 10 minutes. You're standing at the lunch place getting your lunch, 10 minutes. In effect, the network broadcasts to every node in the network, if it's my computer and another one on the other side of the room, or a collection of money center banks, that, hey, Bob wants to send some widgets to Mary, and Mary wants to pay for those widgets in dollars. Does Mary have does Mary have dollars and Bob have widgets? And everybody, all the computers, they go check. They're checking. They're working the proof of work protocol. They're checking to make sure that this transaction is in fact valid. Of all the transactions that have occurred from the beginning of that particular blockchain to now, is this transaction valid? Perhaps it is. They validate the transaction step forward, okay? So they say, all right, yes, it is the case that Mary has dollars and Bob has widgets and everything is on the square here. And for all that work that those nodes have done, they get a small transaction fee. So let's say it's a $100,000 transaction between Bob and Mary. A node might get $2, all right? So they get that $2, but those transactions are happening every 10 minutes. So some of those nodes, they can add up pretty quickly. That information, including Bob and Mary's transaction, is cryptographically connected to the prior transaction And now we have a chain. We have a blockchain. The transaction is complete. The confirmations continue. And somebody else says, hey, I'd like to buy some of Bob's widgets as well. Okay? So that's what's actually happening in Drillisch. And information is broadcast to the relevant networks of the node, and those nodes validate the transaction by determining if the parties involved in that particular transaction do in fact have the funds that are necessary. I've been speaking about hashing, so we're going to dive in real quickly to this concept here, validating the transaction. Okay, right? What actually are they doing there? What they are doing is solving a very complicated mathematical puzzle. I'm going to give you a quick second to answer this one. 2 plus 2 equals what? 4, right? 2 plus 2 equals 4, right? It's like 2 plus 2 is 4. However, if I told you 4 equals x plus y, they could be anything. It could, in fact, be 2 and 2. It could be 3 and 1. It could be 0 and 4. It could be 10 minus 6. It could be any combination of numbers that are 4 digits apart, 4 units apart, right? It could be 3.21456 and 6.21456. So that's an infinite number of possibilities. The work that the miners are completing is solving 8 equals x and y. That is the actual work. And so they could be anything. That is the work and the proof of work. However, that requires rather a great deal of computing power, a great deal of electricity. And that is the downside also of Bitcoin, that it does in fact require that electrical output, that actual physical unit. That is what it requires. And so that is in fact one of the downsides. You'll often hear the statistic stated that Bitcoin uses the same amount of electricity as a small country. Are blockchains trustworthy? A blockchain is trustworthy as its operator. Is it one guy in his house with 2 computers on the other side of the room? Or is it a group of money center banks? And can you trust the banks? So that is what to consider there. No blockchain has ever been hacked. Exchanges have been hacked. People who operate exchanges have been hacked, but no blockchain has ever been hacked. Think of the exchange as someone who's holding and keeping track, and they can get robbed, but that doesn't mean the blockchain has been robbed. It means that they got robbed because they were holding your money. So there are numerous use cases for blockchains. One of the things that's important about blockchain 2.0, Ethereum, is smart contracts. And those smart contracts can be used in real estate closing, establishing title. Logistics is really important. I described earlier how Walmart uses them in their supply chain and logistics. Identity verification. There's a number of different uses for blockchain that we are just barely scratching the surface of what they can be used for. And these slides will be distributed to all participants at the end of this seminar, as well as the recording. So how do I get my hands on some? Again, read the white paper, but there are some where you can trust that they're not going anywhere. We'll outline a couple of those as we go. The thing is, you do have to take control of your own future here. With digital assets, if you have your key phrase written down 2 or 3 places, which is what you should do, is write it down on a hard piece of paper, 2 or 3 places, and keep it somewhere safe, maybe in a safe, then it is secure. But if you lose that, it's gone because no one else has it. There is no place you can go click the button, I forgot my password. There's none of that. And so some people are very leery of cryptocurrencies because of that. Some people enjoy being the master of their own destiny. The choice is yours. But either way, you should not store your cryptocurrencies in a hot wallet, which means one that is online. At least significant holdings should be held offline. But that does incur the responsibility of managing your own destiny. And that is a weight. Responsibility is in fact like that. Private keys and public keys. Your public key is like your mailing address. So you give people your mailing address, right? So that they can mail you things, but you do not give them the key to your front door. So that's the difference between public keys and private keys. Yeah, I'll give you my mailing address, right? But I'm not going to give you the key to the front door. So that's the difference between a public key and a private key. And that is how you should treat them. No one who you wouldn't give the key to your front door. And maybe some people, maybe your dog sitter's got the key to the front door, but she don't get the key to the cryptocurrency wallet, right? So keep them safe. If someone has them, they have access to your vault. This is a shameless plug for Future Now Technologies and its founder, David Spencer. I was speaking about Chainlink when it was 23 cents. I'm looking at Chainlink right now. It is $12.57. So I'm feeling pretty good about myself there. I've been speaking about silver and gold for quite some time. I think Lynn can attest to that.
Oh, yeah.
Let me check the gold price at the moment. Gold price at the moment is JM Bullion, the goldprice.com, goldprice.org. So let's try gold. Gold is $1,940 an ounce. I've been speaking about gold since it was about $1,300 an ounce. Silver is $26.75 an ounce. I've been talking about it since it was about $14. In March 4th, we were talking 2017. So that was 2017. If you would have bought silver between March and April of 2020, from $12 to now $26, you would have doubled your money. Here we have a peek at the Bitcoin. This is the Coinbase screen. I'm going to give you the live screen here. Actually, we're going to look at CoinMarketCap. This is CoinMarketCap. It is a information source for gold, for cryptocurrency assets. We can see here the Bitcoin, Ethereum, Tether, Bitcoin today, 10,342, Ethereum, 383. Let's look back at this Ethereum price, and let's go back to 2017. We're up 4% today. This is the Ethereum chart. Here we have July 2017, January 2017 right here. We've got a price of $10.74 for one Ethereum. At the end of 2017, we have an Ethereum price of $686. Early 2018, we have a $1,363 Ethereum price, and we have since fallen to a $337 price. I'm going to show you one other one. This is called YFI, and I'm going to show it to you. Yesterday, I looked, it was $32,000. Yesterday, Veronica, didn't I show you this yesterday?
Yeah.
Yeah, you sure did.
$32,000 yesterday. Let's look at the chart. This is July 20th, 2020. July. It issued at $1,000, $1,134. Today, Yearn Finance is They're $43,000 today. So I say that to say, my friends, I hope to share with you valuable information. Well, wait a minute, David, that's an outlier. You're right, that's an outlier. Let's look at some other ones. Let's go here. Let's go back home. That's an outlier, David. Let's go, well, we looked at Chainlink. Let's look at Polkadot. Polkadot's a relatively new one. It's only $5. It's a good one to look at. Let's see what Polkadot's doing. It's been getting a lot of traction. I've been hearing about Polkadot. It's a development platform that allows other users to build applications over the top of the platform. My computer is running a little slow today. It's been working hard for me. I can't complain. Polkadot. All right, I think we got something going here. Okay, Polkadot, $5.12. Let's go. So this is their all-time chart. This was August 20th. August 20th, 2020. It issued at $2.84. $2.84. Again, here on September 12th, less than 30 days later, you would have doubled your money. So again, my friends, I hope to share with you valuable information. And I mean, these are just, we could do this all day. We could do this all day in the cryptocurrency market. And as the world becomes aware of digital assets and what they're capable of and the returns that can be made, you here on this phone call are on the cutting edge of digital assets. I do this every day. So let's go back to our slideshow here. So you can go to Coinbase and learn some more and look at digital assets and see which are available for you. This is a quick plug for Grayscale Advisors. They have a digital currency toolkit for financial advisors. So right now, they are teaching financial advisors the same thing you are learning right now. They are teaching the people who are going to be selling this to people all over the world the information I'm sharing with you this evening. I've shared with you, you are on the cutting edge of digital finance. This is the Coinbase Pro trading screen. When we look at an order book, this is an order book here. We see that this is the market size and the price. So the size of this order is 2,000. Someone in the green wants to purchase 2,255 of this asset at a price of 0.1921. I believe this is XRP here, at a price of 19.21 cents. Okay, and someone is willing to purchase or sell rather 1,300 of them for 19.22 cents, right? And the spread between those two prices is 0.001 cent. If they can agree on one side of that 0.001 cent, that hundredth of a penny, they can make a trade, okay? Someone else can come in and say, I'll take that trade, and then that trade will occur and the market will move. And this screen will literally move. Let me see if I can take us there so we can see the market moving. When you hear that described, we'll see if we can see what that looks like here real fast. Authenticator here. All right. All right, so market's not moving. What's going on here? Oh, XRP. So let's go Bitcoin. Let's pull this over here. So now we're looking at a live feed of the Coinbase market platform, Coinbase Pro. And so you see these numbers here are updating rapidly, okay? That is in fact the market moving. And you can see these prices are, they stand pretty solid. And that's because people are coming in with market prices. I'll buy it at whatever the market is right now. And so that is the market price. But you'll see it fluctuate. You'll see, yep, there it goes. You've seen it change. You see it moving again. Now it's 40, 43, 40, okay. You see, look, 45. Now the market's at 45. You see how quickly the thing changed? If you had traded a Bitcoin, you could have made $4 that fast. You could have made $4 that fast. So if you traded 100 of them, you'd have made $400 that quickly. So that's how quick the market moves. And that is what means by the market moves. Over here, we have our buy, sell. These are market orders. Whatever the market price is right now, you can use it. The limit order says that this is the price that I'm willing to pay. That's going to put you down here for a buy. You can also have a limit order for a sell. That's going to put you up here. You can have a stop limit says I'm willing to purchase at this price, but stop at a certain price. And limit, you see the market is moving again. 29, we've got some action. Well, we're still at 40, 35, 35, 41. So we changed from 425 to 41 cents, right? And that's how quickly it's moving. Over here, we've got the trade history, all right? This is a graphical representation of the depth of the market, okay? So if you're willing to, there's a whole bunch of people who will buy from you at a very low price, way over here. There's a whole bunch of people who will buy from you. There's a whole bunch of people who will sell from you, sell to you at a very high price. If you want to pay a very high price, there's a whole bunch of people who will sell to you, right? These are the transactions. We're at 440 now. So we could have, now we went from 45 to 39. We went from 35 to 45 and then back to 30. So you see how quickly there's dollars to be made in between those movements. So that is the Coinbase Pro screen. We'll just move this for now. Maybe we'll come back to it. And we've gone over all these in real time today, so we'll zoom through these. These are the spark lines and trend lines. We're looking at the price here still, back at 39. So can I earn interest on my cryptos? Yes, you can. Depending on the type of cryptocurrency wallet that you're operating, you can in fact earn interest on your cryptos. And by earning interest on your cryptos, some have very, very high interest rates, but it all depends on the different protocol that you're using and how the comfort level you have with someone else having access to your funds. So if you're comfortable with the bank holding the funds, then you can get fully involved in something like a liquidity pool in which they use your funds to provide liquidity for different cross-border currency makers. If you like having your digital assets where you can kind of see them, you want to use a cryptocurrency wallet that allows you to stake your assets. And there's a number of different ones out there. If you have additional questions and would like to know about specific ones, please feel free to let me know. There are a number of different reliable markets that you can use to trade cryptocurrencies. We were just looking at the Coinbase Pro market. We've also looked at the Coinbase screen. Binance, Coinbase Pro, Coinbase, Gemini is also operated by the same group, the same ownership group that runs the New York Stock Exchange. Kraken is another reliable exchange as well. So crypto assets, what do you do with your crypto assets? So you go on a Coinbase and you bought yourself some crypto assets, and now what? Now they're sitting on the internet. But you don't want to keep them on the internet because maybe that's not safe. What you do is you put them on what is called a hardware wallet. A hardware wallet will allow you to have a password of not of your creation. Well, we'll talk about it in a second. That only you know. So only you have access to your digital assets. If you need to move country, if you want to go anywhere in the world, you take your digital asset wallet, which is here is the Ledger Nano, and this is the size of a regular USB stick. This is the Trezor wallet. The Trezor wallet is slightly larger, but still easily kept in any kind of pocket or pocket on a backpack. You can take that with you, and as long as you maintain access to that code, that word, phrase, passphrase, then you will have access to your funds no matter what happens in the world. However, I've shown you the ledger and the treasury. There is a gold standard, and this is something I've just come across. The gold standard in crypto assets is the BC Vault. And the reason it is the gold standard, one of the reasons is because of this screen. You see how small this screen is here? This one looks a bit bigger, but it still can't hold all the information that you want to be able to see at one time. Addresses at the moment are still long, they're long and they're cumbersome looking. So the BC Vault, which is about 150 bucks, depending on where you get it, only get it from the BC Vault people. Do not buy it on Amazon. Don't do without any of that, because it could have been tampered with. And it's important because when you get it, you have to do a very specific set of instructions to set it up. It's called doing the shake. So the password is created by, when you power it on from the first time, you shake it. And that shake is used as a random number generator. And that random number generator is what creates the password on that particular wallet. So not only does you're the only person that have it, nobody else in the entire damn world has it or can recreate it, because they can never you couldn't shake your hand the same way twice, like shaking it like this. So that is why I believe that the BC Vault is in fact the gold standard in cryptocurrency security for individuals. It also allows you to have numerous different wallets. I don't know why you would do it, but if you wanted to have a wallet for one family, if you wanted to have mom had a wallet, dad had a wallet, brother had a wallet, sister had a wallet, and they all could keep them on one device at one time, that's possible as well. Generally, you don't want to share passwords with too many people, but each individual wallet would have its own password beyond the password to the device itself. So where are we going? Digital assets are going to take over the world. We're going to have a new way of doing things. And part of it's going to be tokenization. You might be buying art, real estate, all kinds of things with digital assets. You might be able to own a piece of a building with digital assets and all the rest. Real estate records, voting, digital identity, all of these are going to be based on blockchain systems. As an end user, we may not know it, but they will be based on blockchain systems. Our next level 2 seminar is called Evaluating Digital Assets for Investment, in which we go in depth into what things to look for in evaluating digital assets. Please feel free to tell a friend. Thank you for joining us here this evening. Any thoughts, comments, questions? Please feel free.
Love the seminar. Great discussion. David, I have a quick question. And it's a silly question, so I hope I'm not embarrassing myself. Okay, so if you own a cryptocurrency, and let's say you don't make any profits or anything from that, you don't earn any interest, are you still taxed?
No.
Okay.
So you will be taxed on your crypto. That's actually a very good question. You will be taxed on your cryptocurrency investments when you sell them. So just like a stock, you will be taxed on any sales. If you earn interest, you will be taxed on interest earned. There is discussion about whether, in liquidity pools, they have this process called balancing. To keep it simple, let's say I give $1,000 to the liquidity pool, and when you do it, you give it half in Bitcoin and half in Ethereum. You earn interest of $100, but your $1,000 is going to stay the same. However, the prices of those two assets does not stay the same. So a normalizing formula is used to maintain your balance at 50%. That could result in a loss depending on which direction the price of the assets went. that loss could also be tax deductible, just like the gain would be taxable. And so that's a very good question. I appreciate that.
My question, in addition to her question, is that how would the tax authority be aware of me? How is if my identity is protected, how are they aware that I sold an asset and I got this amount of interest if they're not monitoring the actual blockchain?
So most regulators have taken to the practice, and that is a good question. So most regulators have taken to the practice of operating nodes on the blockchain. So the SEC, they all have nodes on the Bitcoin blockchain. But you can see which wallets are doing what, but you can't identify who owns the wallet, right? However, most of us purchase our digital assets through exchanges. Exchanges are organizations that operate a node on the blockchain as well. And in addition to operating a node, they offer the service of exchanging assets for other assets. In their business of doing that, they have regulators they answer to. And part of their regulatory requirements is reporting to what the transactions that their clients go through. So at the end of every year, you receive in the United States a 1099-B or a 1099 consolidated usually. Part of that is the 1099-B, the brokerage statement, which outlines your purchases and sales, generally the sales of traditional assets, stocks and bonds, over the current year. And that information is sent to you, and it's also sent to the IRS. When you file your tax return, the IRS uses their matching system to make sure that what you report on your tax return is the same thing that the brokerage reported to them on their regulatory filing. So a company like Coinbase, they have an obligation by their regulators for regular exchanges to report the transactions of their clients. And so when you open your Coinbase account, it takes a couple days because they have to verify your ID and that you are who you say you are. And so the reporting happens at the exchange level, not at the actual blockchain level. Very good question.
Very good explanation. That's very thorough. Thank you.
Anything else before we take off and I turn you guys loose? Well, again, go ahead.
Sorry. I had one last question, which I was going to ask you about privately, but I guess I just put it to everyone, which was just in your perspective, because I realize Lynn is also in the accounting field. Not too sure about your wife, but I wanted to know what you think audit is going to look like with a blockchain system. How do you vision that for the future? Because I heard about the technology audit that you spoke about there, the software audit. I was just wanting a little bit more insight into how that goes, or how you think that would go.
Right. So software audits are going to be huge. There was actually just a big hubbub about that within the last couple of days in the industry. So software audits are going to be one thing. And part of an audit is it's not just verifying that the numbers are right, it's verifying that the processes are right. Because if the processes make sense, then you can have more confidence in the numbers. So a large part of what auditing is still going to do is still going to be looking at the processes that these firms use in their creation, updating, and management of their software platforms. So, and even if I'm a blockchain company, I might be using blockchain software, but at the end of the day, I've still got to do debits and credits in my in-house accounting, right? I still had to go and buy a desk so that I could put my computer on and program my blockchain. So while I'm at my desk, my desk is being depreciated. My computer is being depreciated by traditional accounting methods. And so that's the domain of the traditional auditor. It remains to be seen if the accountant is going to get more involved in the software audits. So that's still kind of up in the air. Of course, the accountants would love to be, because that is going to be a huge, huge industry. And I have a feeling that Future Now Technologies is going to try to get involved if we can. So there's a number of different ways to get involved in the blockchain and cryptocurrency industry, and it's very exciting. Very exciting. And feel free to ask me any other questions privately if you would like to. I'm going to turn you guys loose. I have another meeting at 8 o'clock. Thank you again for joining us. The slides will be available Wednesday of the following week, and they will also come, the slides will be available as well as the recording. Thank you again, Future Now Technologies, and we will be having another seminar shortly. Feel free to tell a friend, and thank you for joining us.
Thank you,
Thank
David.
you. Thank you.
Thank you very much. Have a nice evening.
All right, you too.
You too, man.